guys, welcome back. So today I want to speak briefly about what happens if your appraisal comes in low. As we know right now, times are crazy in real estate, and a lot of people are bidding up houses higher and higher and higher, which puts you at risk for having these low appraisals when you actually do win a house. So let's go over what happens when appraisal comes in low. First, let's start off with if you actually have an appraisal contingency on your offer. So the contingency of an appraisal basically says that the price that you offered is based on this appraisal coming in at the purchase price. The appraised value has to equal or exceed the amount you're offering. If it comes in lower, then you have a few options if you just have a typical appraisal contingency. The first option is you're able to ask the seller to lower the price to the appraised value. So that's the route that when I have clients, if we just have a regular offer, that's the route I typically will take first. And that's why I put it first, because it's normally the most reasonable offer. A lot of times the sellers do understand that if the house already appraised at this price, unless you're going with a different loan type, then it probably will stay at that same appraisal amount unless you get a cash offer that doesn't have an appraisal. So that's usually the best route to take, and that usually works most of the time. Now, if they refuse to lower the price, then you have option B and option C. Option B is that you can go in and cover the difference of the appraised value and the offer price. For example, if you offer a purchase price of $400,000, it appraises at $390,000, then you can offer to pay that difference of $10,000, and it will be added on your closing costs. So now, if that gap is way too big, you don't want to pay that, then you also have the option of activating your contingency and terminating the agreement under the terms of the appraisal not equaling the purchase price. And you have a time frame to do that. It's usually within a 3-day window, but speak with your agent in your state about how your contract is written and everything to make sure you're doing this within the time frame. If you don't do it within the time frame, then you're not able to activate a contingency for it, and you will either have to purchase the house and cover the difference, or back out and you will lose your earnest money, and you don't want to do that. Now, what is very common now is that a lot of people are offering appraisal gaps, and appraisal gaps means that you're offering to cover a set amount of the difference if the house does not appraise at the full purchase price. For example, if you have an appraisal gap, you say I'm offering you $400,000 on this house with an appraisal gap of $5,000. Now, when this house comes in low at $390,000, then you will have to pay the $5,000, and the purchase price will then change a purchase price of $395,000. If you do offer an appraisal gap, be sure that you already plan in your head that you will cover that difference, because once it comes in low and you have to cover that difference, it's no way to get out of it. It's either you cover it and buy the house, or you don't buy the house and lose your earnest money. And depending on how much earnest money you're doing, that could be a good amount. So that's how an appraisal gap works. So if you're using an appraisal gap, I'm going to say this again. Be sure that when you offer whatever amount of appraisal gap you're offering, you have calculated that you already have the money to cover your down payment, your closing costs, your home inspections and everything, plus the full amount of the appraisal gap. That way, if it comes in and it appraises, it's just extra money you don't have to spend. Or like if you only have to spend part of it, then like it's kind of a bonus. But you don't want to bank on it appraising at full value and offer an appraisal gap. Then you're shocked when it comes in, or offer this outrageous appraisal gap of $30,000 or $40,000 and not want to pay it, because you're gonna have to pay it. There's no way to go back and renegotiate that. And the third option is if you have waived your appraisal, what happens in the event of a low appraisal? Well, I'm sorry to say this, but if the appraisal comes in low and you have waived your appraisal, then you're on the hook to cover the full value of the difference in your closing costs, which means that if you have an offer price of $400,000 and it appraises at $390,000, then you have to cover the full $10,000 difference. There's no negotiating at that point. If it appraises at $380,000, then you have to cover the full value. You will have to cover a $20,000 difference added on to your closing costs because you did not leave in an appraisal contingency. So I hope that helped. It's a quick video just on what happens if an appraisal comes in low. I hope these options help you, and be sure that if this does happen to you, discuss all of your options that are in your contract with your agent and your lender in order to make sure the finance part works good on you too. So I'm Appraiser Williams, and I'm out.
I need a house in the hills that come with a deck and a grill. So all of my niggas say we been cooking for real. I gotta get back to the real. We gotta get back to the field. This all my people is looking up still. Said I need a house in the hills that come with a deck and a grill.